Saturday, February 28, 2009. Thank you everyone for joining me on the Endless Mountain Network. Thank you for your comments, your subscriptions, your ratings, and your personal messages. In this video, I'm going to be talking over a few different things. It'll most likely hit the 14-15 minute mark, but of course I'm not too sure what I'll be talking about. First off, I'll be talking about Glenn Beck. After that, the mainstream media, Mayan calendar prediction on the mainstream media, the education system, along with the economic collapse from an accounting point of view, and a stock pick at the very end. Okay, so let's get started. We'll start off with Mr. Glenn Beck. If you're watching, Glenn, and even if you're not, thank you so much, Mr. Beck, for what you have done, for going on Fox. The Inconvenient Debt video is really an amazing video. It's showing a lot of the truth and the information. You've gotten so many good videos. You've had Gerald Celente on your show. And to me, this is a major help. And once again, just like Peter Schiff, there's going to be some people who are going to say that Glenn Beck is very negative. He's like a Dr. Doom. When in a sense, if I talk about Dr. Doom or negativity, I'd have to think of someone like Larry Kudlow, for example, because Larry Kudlow is avoiding the situation. He's trying to pretend like everything's really good, when in fact, in a sense, they're not. Mr. Beck is on here helping people prepare for what is to come. Like, no one knows exactly 100% sure, but I was pretty close to 100% you're going to be that this is going to happen on what he talks about. He's talked about the inconvenient debt. He's talked about different scenarios, 2014, of everything that he says. He's clearly came out and said that he doesn't want it to happen and that he hopes that he is wrong. But nonetheless, he's going out there talking truth, which is very big. And one of the Mayan calendar predictions that I like to be able to state based on mainstream media is that we're going to see more of this. We're going to see a lot more of people coming on different mainstream media networks and speaking the truth for what is happening. And the reason in which that I'm saying this is because, first of all, the Mayan calendar talks about how this is a truth age. So this has got to do with truth. So that's a big reason why. And another reason is because we're moving from a fear-based to a love-based system. And I see a lot of love from Glenn Beck and what he's doing for helping people, and that's why I think we're going to see even more of it. As we move into the spring, summer, and fall of 2009, we will start to see some more truth on the mainstream media. Yes, there's still going to be lies on there, but I think there's going to be less and less lies on there. This is my opinion, but I do want to say something. First of all, I was in a posting forum recently, and I was talking about Mr. Glenn Beck, the inconvenient debt, the economic collapse, dollar collapse, when it's going to happen, preparation techniques, if you will. And I had someone come on and say that Mr. Glenn Beck is not an economist, that he's an alarmist. Take his information with a grain of salt, and there's no need to be in this whole survival mode just quite yet. So remember, Mr. Beck is not an economist. I guess he didn't go to school in economics. This is what one person said, who claimed to be someone who has like a bachelor's or master's or whatever degree in economics. So maybe he's the one to listen to in that sense, because I'm going to tell you right now, I do not, this might be surprising to you, but I do not have a college degree on Mayan Calendar Consciousness. I do not. No, I don't. I have never ever even taken a Mayan calendar course, yet I know what I do about it. Why do I know about it? Because I go on the internet and I learn. I've read books on it. That is the reason why I have learned it, along with other intuitive ways. That is why. So once again, how important is college? Because other than the Mayan calendar stuff, my #1 subject right now is something, once again, that I never took in school. And maybe the best people in the world never took this subject in school. That might even be poker. Super System 2. I read this book. I read, well, not the whole book. I mean, I didn't read like Omaha 8 or Better, but I read a lot of the stuff in here, especially the No Limits section. Very good book teaching me power poker. I read Dan Harrington, Tournament Poker book. Helped me out so much. I read this in about a week, and so many hand simulations, and my game improved like 10% immediately. Phil Gordon had a nice book. David Skolansky helped my math part of it, gave me some good mathematical formulas, good different theories with the theory of poker. Poker MBA, this is like a good comparison book with business and poker. The Book of Bluffs helped me for times when to bluff, even times to call other people's bluffs. And the Ultimate Guide to Poker Tells, this way when I'm actually at the live casino, I can tell if you're bluffing, I can tell if you got a strong hand very easily. And I use the best that I can to try to get tells from people and try not to give up tells myself. Of course, I don't really play that much anymore, but nonetheless, I learned this from reading books, from reading articles on the internet, and through experience. And I didn't go to school for it, but I did learn it that way. What I'm saying here is, do you need a college degree or university degree to figure something out? Because I do have a degree. It's not in the Mayan Calendar Consciousness, and it's not in poker, but I do have a college degree with an honors program in accounting. You know what? I don't enjoy accounting, and after I got my degree, I spent in schools, overall in school, I spent definitely 5 digits with rents and all these expenses, well over 25, 30,000. In fact, some of that money is personal debt that I haven't even been able to pay back yet. And nonetheless, I took the accounting course and I did a couple jobs with it. One of them paid me $8 an hour. One of them paid me about $9, $10 an hour. Really had a hard time living off of it, but nonetheless, that's what I did. And you know what? I don't think you'd really want to... I personally don't enjoy accounting, nor would I want to do it again. And you tell me some information about it, and I've forgotten a lot about it, and I've lost a lot of interest in different things. But because I have a degree in it, apparently I'm supposed to be this whole know-it-all like that person in economics was. So what I'm basically saying is that just because someone has a degree in something doesn't mean they are that so huge as far as knowing it. I'm sure they obviously know enough on it, but what I'm saying is you can do better at something else without a degree than someone does having a degree, in the sense that we are in a day and age now where we can learn everything we want on the internet, and just by buying books, sitting at home and spending an hour or two and reading and taking notes on the situation, which is easier. I mean, this book, back then it cost me like 80, 90 bucks for this book, and I'm sure this 1,000-page book now would probably cost about 140 bucks in a college. And the prices of these books I generally figured out were half the price at bookstores. So you buy an $80 history book at a college, it's $40 at your local bookstore. So they really got you big in college. They really got you to pay more money and to get inside of debt. They even went out and said, oh, by the way, your student loans were interest-free. Oh, but they found ways of nailing you with interest after that. Especially if you missed a payment, they give you $50 fees or whatnot. It was all part of the system in which I am not a big fan of, that I think needs to be changed. However, like I said, I did take accounting, and I have been looking at some balance sheets on the internet, on Yahoo Finance, and I'm going to give you some information based on accounting, the information that I know, on what looks like could be coming anyway. I'm going to look at 4 individual companies and a sector. The first individual company is Visa. Visa. They don't have much for long-term investments. I'll get to that in about a couple minutes. But their company has $32 billion apparently in assets, and of those $32 billion, $21 billion is goodwill and intangible assets. Now, once again, like I was talking about accounting when I was just saying how, I took a CGA class and didn't do too well, which is like a CPA class in the States, I guess. And goodwill and intangible assets, what do you think they are? First of all, intangible assets. Intangible is stuff you can't touch. And goodwill, that's like prospects of the company, what the company is worth based on consumer confidence, what the future expected value of it is. So apparently, intangible assets and goodwill is worth $21 billion to its $31 billion in assets. To me, that just boggles my mind. I just don't see how that makes sense, how that company's assets could have so much in those categories, especially if you talk about like what the system is. Visa's a credit company, and that's what the Mayan calendar is getting away from. So, I said I'd make a stock pick later. This isn't a pick, but nonetheless, shorting a company like Visa or putting a put order in on Visa for the future is a very good play because their goodwill and intangible assets are nowhere near that high. They also said they had $2 billion in accounts receivable. Heck, they're going to have so many write-offs. I remember in accounting class with accounts receivable, when you didn't get your money, you had to write off as bad debts, and they went off your assets and into an expense to reduce your income. So that's going to happen to Visa. It's going to happen to Visa. Their accounts receivable is going to get higher. There's going to be so many more people that can't pay it. And as a personal recommendation, I've had people ask me, what do I do with credit cards? Well, A, if you can pay it off, please pay it off. If you can tear them up, definitely tear them up. But if you're in bad financial shape and you still can put money on the credit card, if you need to buy food or water with your credit card just to survive, even if you don't plan on paying it off, come and do it. Who cares about Visa? The company's just going to burn anyway. At least I think it will because of the system that we're getting into. And the next company, at&t, $284 billion in assets, and 135 of that is intangible assets and goodwill. That to me just doesn't sound right. Your goodwill should be no more than 1 or 2% of your assets, but it is huge in that spot. So anyway, enough about goodwill and intangible assets. Now I want to talk now about long-term investments. That's another asset class that I've been seeing on these balance sheets for these companies. First off, GE, General Electric, has $800 billion in assets. Half of their assets are long-term investments. Well, long-term investments are like stocks, it's mutual funds, it's bonds, stuff like that. We now can see where the bond bubble is going to have to go, because when GE needs to raise capital, they're going to have to sell investments. And if they sell these stocks, that brings the stock market down. And if they don't sell the stocks, that means their long-term investment value, which is $406 billion according to Yahoo Finance at this moment, is going to go down to $390, $380, $350, which means that they're going to have to do it because their equity is going to go so bad to the point that they're going to be in bankruptcy problems. So when you're in bankruptcy problems, you got to raise cash. This is one way to raise cash. Enough about GE, let's talk about the financials. It doesn't matter which financial company you look at, whether it's Citigroup, Bank of America, JP Morgan, Wells Fargo, it's all the same. Citigroup is the one I'll talk about. They apparently have $2 trillion in assets and $1.3 trillion in long-term investments. So 65% of their assets are in, of course, these stocks and bonds and whatnot, which means as they need to raise capital, the same thing is going to happen. It seems as if most likely that they're going to have to sell stocks in order to do this. This is going to help bring the stock market down. And of course, if they don't sell it, they're just going to be forced to later because they're going to be worn down because other people are selling stocks. So when we've seen the market already fall, 2009, we've seen the highs of 9,100 on the Dow, test the $7,000 mark already. How much of it is because of companies like GE and Citigroup who have already been getting rid of long-term investments? And if they haven't, when is that going to come? That could be the answer to when we see Dow 3,2000 like Vision Victory is talking about. This could be a possible reason why, is because they're the ones that own the most stocks. So we take a look at Dow 7,000. What percentage of that 7,000 is companies like Citigroup and Bank of America and GE and all these companies that are holding these long-term investments? And I would have to say a lot of it. So the stock market hits hard, the financial institutions are going to get hit really hard with it. another reason why the financial collapse is going to happen, and it's just going to cause a lot of difficulties along the way. I don't got like, the information that I get is always a few months old, but nonetheless, it wouldn't surprise me when I see these fallings that a lot of it happens to be banks like Citigroup and JP Morgan selling shares of different companies, because in order, I mean, if the banks get nationalized, you know the government's going to be like, well, you got to sell what you can on investments, because then the government would have the investments, and I think they know the whole system and how it's going to fall anyway. So enough about that. That's what I see about these long-term investments. It looks like it could be a possible reason for the markets to just go a lot lower because of the balance sheets that I see amongst the financials. I look at balance sheets like Walmart, they have none whatsoever long-term investments. So each company is different, but the financial institution seems to have all of these long-term investments. So we'll just see how that goes. It could mean a lot of Dow Jones points being lower because of it. Alrighty then, let's do a final stock pick. Remember, I don't have an economics degree. I don't have any of this. I need this paperwork to do stocks. Well, I don't have any of that, nor do I want to, because I learn everything on my own. This stock pick that I'm doing is gambling. Stocks are gambling. It's risk reward. I like the risk for its reward personally. If you do happen to make the investment, please be aware of all the risks that are associated with making the play and different ways of making the play, because there's options that are available along with regular buying and selling. So the company is called Ultra Petrol, UTLR. And they're on the NASDAQ exchange. They're trading at $2 a share right now. And based on their equity and their market cap, their value is worth $10 a share. I've talked about goodwill and intangible assets. It's under 1% of their assets, which is very good. They have no long-term investments, which is really good. The company is making money, and their balance sheet is looking very fundamental as of a few months ago. And the company ships grain, it ships forest products, minerals, crude oil, petroleum, and other things like that of that nature. That's pretty much all I know. So as far as any news the company that's had lately, as far as any earnings that are going to come out, I don't know any of that. I 100% recommend any long-term stocks that you are trading to do your own research for what you are doing within the stock. So myself, that's a stock where if it were to say, a company like this, if it was to get bought out, the stock would go to like $6, $7 immediately. You'd see wake up one day, just like Nova Chemicals did earlier. It would just wake up and it would just be worth a lot more if it gets bought out. But like, once again, I'm not watching the news for information on buyouts, any of this stuff, because quite frankly, I find that stuff kind of boring. The only information that I personally use for looking at particular stocks is the accounting information because of my accounting degree. But what is more fun is technical analysis. The technical analysis on Ultra Petrol does not say buy. However, at some point, a bottom is likely to be on this particular stock because of the balance sheet, which is another reason why I recommend stuff like options. Put an option in for like $2.50 or $3 in on this company. And then if it does happen to go up to $5, $6, you can cash in your option at that point there. So that would be something that I would look into for a company like that. Ultra Petrol is the company, and remember the risks that are associated with when you play the casino stock market, in which Don Harold has called, which I totally agree with what he says. It's nothing more than a casino, but you're trying to beat the casino, just like poker, as I was talking about. Poker is a casino game that can be a skill-based game, and so is this. So I hope you enjoyed my I hope you enjoyed my video. Thank you so much for watching. Have yourself a great day, great night, great morning, great weekend, great week, and take care. God bless everyone.